Okay, we're recording now, so I'm going to press start the broadcast, and then, like I said, just wait just a sort of moderately uncomfortable amount of time.
Okay.
The broadcast is now starting. All attendees are in listen-only mode.
Hi, everybody, and welcome to the webinar today. Today, we're going to be working on something that's really important for a lot of NSFs and a way to really reduce costs and find some efficiencies both in terms of resources and time, and that is doing a better job with how we deal with G and HST. I'm really happy that we're joined today by Martin Seaton from the COC finance team. He's developed a real expertise both in the private sector and here in the nonprofit sector around taxes. He's going to share some of that with us today. But before we get into that, we're just going to talk a little bit about how to use the GoToWebinar tool. For most of you, you should see a box over on the right side of your screen. In that box, you can ask your questions, make a comment, and that's the place where we will hear from you. Part of the reason for that is you are all muted today, so as to avoid dogs and baristas and sirens in the background, all of our participants are muted, but we will be able to hear you through that chat window. Secondly, you can see me right now. You can also see Martin. Don't worry, we cannot see you. The other thing on the right-hand side, you can see in the Handouts tab towards the bottom. From there, you can see the slide deck in PDF and download it directly from there. We'll also be sending out a link to that PDF in the follow-up email. So you'll have plenty of chances to get this resource directly for future reference. We'll also be recording the webinar today, so you'll be able to go back and have a look at it, and look at any of the other points that you may have missed as we went along, or to share it with colleagues once you have that link. So with that housekeeping out of the way, I'm really happy again that we're joined today by Martin to talk about this topic. So Martin, over to you, and thank you again for making the time for the community.
Okay. Well, thanks, Dave. Thanks for the introduction. Just to give you some background, Dave, you can go to the next slide. To give you some background on myself, I am, as you may pick up, from Scotland originally. I got my CA in Scotland in 1990 and my Canadian CA just a few years ago. I recently came from Town Shoes Limited, where I saved them over $1.5 million in HST, and I was pleased to join the COC last December. Dave, next slide. I have had, as Dave mentioned, a lot of exposure to HST in the for-profit sector, and since coming to the COC, I've had a lot of exposure to it in the not-for-profit sector as well. But I just wanted to give you some feel for HST and for the legislation before we go into today's presentation. There are courses on GST and HST which go on for days, and those are directed to people who already know an awful lot about GST. CA firms have departments dedicated to this tax. There are people within that department who specialize on parts only of GST and HST. And one of the topics, the main topic we're going to talk about today, which is place of supply, there are numerous CRA documents, one of which is 137 pages long, and that's English only. So I hope from that you get a feel for just how large a topic this can be, and what the goal today is, within the hour that we have, is to really give you, the users, enough information that you can hopefully detect errors, and also give you enough information that you can look at something and say that just doesn't seem right, and allow you to then follow up and investigate a little bit further. That said, today's seminar, today's webinar is really directed primarily, I would say, towards the end user. So the person who's signing the check, the person who's in accounts payable, and whoever's responsible for those departments. Those are the people who I believe are going to really benefit the most from improving and getting a little tune-up, perhaps, on their GST and HST knowledge. So that said, the focus on today is on input tax credits, or ITCs, as they're often referred to. And ITCs are really just a way of describing GST and HST which you are allowed to reclaim on expenses. We're not going to talk about GST or HST on income, only on the expense side of things. So what is GST? Well, we all know it, and GST is classified as really a value-added tax, and a value-added tax is one where the government really gets the benefit at the end. People who buy it or who get GST in the cycle up until the end get to reclaim it as an expense, which is what we're talking about. GST and HST are similar, but GST is really one component of HST and something we're going to expand on in the next slide, I believe. And then finally, sorry, in a couple of slides' time, finally, it's good to know that there is a limit beyond which you must register for GST, and that is $30,000 a year. Now, it's not a calendar year, it's actually the last 4 consecutive quarters, and so it's just good to know if you're a supplier, if you're concerned about a supplier or anything like that, it's just good to know that that is what the government sets out and where your suppliers should in fact be registering for GST. Dave, next slide please. Okay, just to talk about a couple of things about important points before we go into the details. One is timeliness. So you actually have 4 years in which to go back and correct for mistakes. So if you've identified something that you've done incorrectly and you realize you've done it every year, you can actually go back 4 years and correct that. The downside to that is so can the CRA. So when the CRA come in to audit, they can actually go back 4 years as well. So it's a double-edged sword, but it's fair on both parties. The rules are different for provincial taxes. I'm not as familiar with them, and we don't really have to cover those today, but needless to say, if you're in that situation, you may want to explore your province's rules separately. It's also important to realize your supplier's opinion on HST. As strange as that may sound as a comment, I want to expand on it. So for the COC and for the NSFs, we have to eat some of the HST and the GST. We have to expense some of it. We don't get to claim it all back. That's not the case for your suppliers. Your suppliers are going to get 100% back on their expenses, and they're going to give 100% of whatever they charge to you to the government. And that is important because it's important to realize, because they're not as concerned perhaps about getting it right as you are, because ultimately they're just going to reclaim it all, or they're going to give it all to the government in any case. And so they have less of incentive, I think, to get it exactly right, whereas there is an impact on us because we have to absorb some of that tax. And so that's an important distinction, and we'll touch on it from time to time throughout today's webinar. Also important to note is, I've seen some comments in the CRA website and some of its documents, and it alludes to the fact that self-assessment is something that's more important, or they perceive as more important for charities. And again, that's because we don't get to reclaim 100% of the GST and the HST. We have to absorb some of it. And so they are, they're, from the wording that I've read recently, they're a lot more diligent when it comes to charities and their self-assessment than they would be for for-profit organizations. So again, something just to bear in mind. For those of you, and I apologize if occasionally I'll say something and just presume that everybody knows what it means, for those of you who are not familiar with it, self-assessment is where you would find a mistake, find something that's not quite right, and if you like, own up to it and correct it in your return. So they're looking for charities to identify errors and to correct them, and that might mean paying less, it might mean paying more, but that's the CRA's opinion, and it's its attitude towards not just not-for-profits, but people in general. And then a couple of last admin points. One is important because you might occasionally hear a supplier tell you that they can't charge you GST or HST. In actual fact, anybody in Canada who's registered for GST is also automatically registered to charge HST. It's possible that their systems can't do it. It's possible that they don't want to do it. Any number of other things, but they are registered, and that's just an important point for when you're in discussions if they charge you incorrectly. And then finally, if after today you decide you want to read some more about GST or even some of the examples that we will come to later, the phrase participating provinces will come up. And simply put, and you can look for a long time to find a definition, and you may not understand it. It depends on which definition you get. Participating provinces are provinces which have HST. It's that simple. And non-participating provinces are provinces which do not have HST but instead have GST only or GST plus their provincial tax. And that's it. That's just an admin point that's important to note. Okay, Dave, next slide, please.
And Mark, just before we move on to the next slide, just wanted to point out, you mentioned looking into things later. For everybody who's looking to download the slides, we do have a couple of slides in the appendix with some helpful links in those. So there will be some opportunities for you to look at this a little bit further on your own if you'd like.
Okay, thanks, Dave. And one of those, one of the documents in there is the 137-page document that I referred to. As scary as it might sound, it's actually very helpful. And some of the examples which I've pulled into this deck actually come from that document, and so it's actually been quite helpful. Okay, what input tax credit can I claim? So depending on where you are in the country and where you are in CRA terms resident, you get to claim a different amount. And so everywhere in Canada, you get to claim 50% of the 5% GST. And then listed below that are all of the provinces and the percentage of the tax that you can claim for the provincial tax or the provincial portion of the HST. For example, in Nova Scotia, you can claim 50% of the 10% provincial component of HST in addition to the 50% of the 5% GST. I'm going to presume that most people know this. I am, however, going to just touch on something, and this is something I meant to state earlier. As much as I may know, and as much as I'm going to bestow onto you today, as much knowledge as I'm going to bestow onto you today, there is a depth of knowledge that it really cannot come close to either of those things. And so, when you're in a situation that is detailed, it's difficult, I really strongly urge you to either take the advice of a tax expert or potentially even the CRA. I've contacted the CRA in a couple of times in the past week just in preparation for this webinar alone, and many times over my years. And I can tell you their service level has improved and is now really actually quite good. You can call them or you can write to them and ask for some a written ruling on something particular to yourself, and the details of how to do that are in the appendix also. So that said, one thing that you may or may not be aware of is if you have dual residency. So if you have an office in, say, Alberta and one in Ontario, and I believe that applies to at least one NSF, then there is an allowance for you to have residency in both those provinces. I will caution you, and again this is where the tax expert or the CRA's advice comes into play, that does not allow you to then pick and choose which expenses you get to claim the 8% of the 82% of the 8 on and the 50% on the 5 in Alberta. There are place of supply rules which we will talk about extensively, which would dictate where those goods and services would be taxable. And so It's a very complicated, very detailed area. I'm going to try and give you sort of a bird's eye view of it today and give you some insight into it. But if you do have dual residency for your NSF, I strongly urge you to contact the CRA and get their advice on how you can proceed. I think that's it, Dave. Next slide. Okay, so here's an example which I put in. I'm presuming again that most people understand this already, but just in case, and also because I want to come back to it later. This is an example of an Ontario-based NSF receiving an invoice for $1,000 from a Quebec-based supplier, and for the discussion at hand, we're going to presume that this has been properly taxed, and you will see why that is possible later. So in this case, they've charged GST of 5%, HST of 8%. That's breaking down the provincial component for a total of 13% in Ontario, and then the total payable would be 1,130. You then get to reclaim, as we just covered, 50% of the GST and 82% of the HST for a total input tax credit of $90.60, leaving you with an expense of just $1,040. Again, we're going to come back to that later. I just put it there as reference should you be sharing this deck with somebody who maybe is new to this area. Okay, Dave? Place of supply rules. This is about the only humor in the deck today, I'm afraid. So, as you'll probably guess from the image in front of you just now, the place of supply rules can be very, very challenging, I would say, and they're also very, specific to certain areas. And so you really have to have an overview of the areas which concern you the most, and that's what today is meant to do. So in preparation for today, I spent some time with Dave, and Dave, thank you for your input. Dave gave me a lot of insight into the areas that will impact the NSFs, and so we've been able to tailor today, I hope, to meet those needs. Also, I've gone through a number of actual invoices from NSFs that NSFs have received. I don't know how they've been processed, but I will identify errors in those invoices, errors that have been made by your suppliers and how they've taxed, and then we can use that as a sort of like a starting ground for discussion on place of supply rules. So Dave, you go to the next slide. The next slide is going to show some, and I really do mean that, this is some of the areas where there are rules on place of supply, and for every one that's there's probably about 2 or 3 which are not listed, and so you really want to focus in again on the areas that are going to impact you and your business. And Dave, you go to the next slide. We're going to focus on today the 2 most common areas that impact the NSFs. So the first one is,
Martin, are you saying then that if people tune into the webinar today to learn about railway rolling stock, that they're probably in the wrong place?
They probably are. If there's a high demand to talk about that some other time, I'm sure I can find somebody else to talk about it. But for today, we're not going to touch on that or any of the other things that are great out there. Tangible personal property is one of those things that needs some definition. Essentially, it's hard goods. So anything that you can touch, feel, kick, the likelihood is that is tangible personal property, and so it really comes down to when you buy something. In our case, and so when we're buying something that is going to fall under the place of supply rules for tangible personal property supplied by way of sale. Sorry, when we buy something that's physical, that has a physical nature to it, that's where that's going to fall. And then services, I will kind of set this up a little bit for you. Services is where, from the invoices I've reviewed, is where the errors or the bulk of the errors from your suppliers is coming. And so we're going to spend a little bit of time on the tangible personal property, and then the bulk of the time is going to today be spent on services. Dave, you can go to the next slide. In front of you, I don't expect you to read it, and I'm certainly not going to read this. This is the government's, the CRA's general rule for sale of goods. And essentially what it comes down to is that goods are taxed where they are finally delivered. There are provisions for where there's more than one destination. There are provisions for any number of things, none of which I believe you will be interested in. That said, I think that this is best illustrated by going through some examples. Dave? Okay, so in this case, we've got an NSF buying supplies for a new athlete recruitment program and shipping them directly to their PSOs across the country. In that case, HST would apply to supplies that are shipped to the PSOs in the participating provinces. As you'll recall, that's the provinces with HST. And then GST would apply to supplies that are shipped to the PSOs that are situated in the other provinces, the non-participating provinces. I put a note in here. This, and again, some of this wording, some of these examples come from the government's website and have been amended to suit the audience. I did make a note there that you would likely in the second half of that, the non-participating provinces, you would likely then have to self-assess for PSD in those provinces as well, for example, in BC. Dave? Sorry, Dave, can you just go back to that last slide for a second? I just wanted to touch on one thing. So, you know, this presumes, it's not really clear, but this touches on one other thing that is important. This is where the supplier ships the goods. So when the supplier is entrusted to ship the goods across the country into these various provinces, you should expect the supplier to tax you according to this rule. If, on the other hand, let's say you take possession of the goods. So if you take possession of 100% of the goods in, and I'm just going to use Ontario as an example, then you're in a situation where you've paid Ontario HST for all of these goods, but in actual fact you're then going to ship them across the country. In that case, what you would do is you would self-assess. So you would reduce your Ontario liability and you would make an adjustment for the other provinces as laid out in the example below. I apologize, I hope that's clear. If not, I'm happy to come back to it later, but I think as we go through the examples, you'll get a good feel for that. The second example is where Gymnastics Canada has items to be given away at its national championships delivered to the event location in Prince Edward Island. And again, this is some legalese which you'll get used to if you read any of the documentation on the CRA website. Based on the terms of delivery and the agreement for sale of the goods, legal delivery of the goods to Gymnastics Canada occurs in PEI. Regardless of where Gymnastics Canada's head office is located, because the goods were shipped to them in PEI, then the supplier is supposed to, and I do emphasize the supposed to charge a PEI tax of 14%. Dave? Good, thanks. A couple more examples and then we'll move on to the next topic. A supplier in Ontario agrees to sell medals to an Alberta-based NSF. Based on the legal terms, it's supposed to occur in Ontario. However, the supplier agrees to have the goods shipped to the NSF in Alberta. And again, although the legal delivery, and that's a CRA terminology, of the goods occurs in Ontario, delivery of the goods to the purchaser would then make it sort of default to being an Alberta tax rate of 5%. So all in all, I think you'll see that, the place of supply rules for tangible personal property, aka goods, is fairly straightforward. I do one more example, and that is in the case of export. I'm going to preface this by saying that if you're in this situation, I strongly encourage you to talk to a tax expert or potentially even the CRA, because things are there's lots of bells and whistles, lots of catches to this one. So this is where a supplier in Nova Scotia makes a supply of goods to an Ontario company, but ships the goods out of the country by courier. And the courier part is really just a proof of delivery. It's not that it has to be couriered, just the fact that you have to have a proof of delivery where you're shipping something if you're going to claim back the GST and HST. In that case, no tax would apply because the goods were shipped outside of Ontario. So if that's something that applies to you, be it during games, be it special events, or just an occasional thing, again, I would urge you to talk to a tax expert or potentially the CRA, because if those goods are coming back at some point in time, GST and HST could and would likely apply. There could also be duty applied. There's lots of things that, again, we just don't have time to cover off today. But I suspect this is not something that happens too often, but when it does, it could have a significant tax effect.
So Mark, if I can grossly oversimplify, to summarize, the place where the person signs the purelator, place where you should be paying the taxes.
Yeah, essentially.
So wherever somebody signs that weird little screen thing that the purelator guy has, that's the place where taxes are due, in a nutshell?
In a nutshell, there are, I will confuse it somewhat more though. If you then take that and you ship it somewhere else yourself, or you use it somewhere else, then that's where the tax would be liable. And I'll give you an example of that. So let's say you sign the courier slip in Ontario, but you then take the goods to PEI or for giveaway or something like that. The letter of the law would stipulate that you would self-assess as if you had those shipped to PEI because you shipped them yourself.
Okay, thank you.
Does that help?
It sure does.
Okay. All right. So here's a real live invoice from the archives here of an example where goods were shipped to British Columbia from sunny Toronto and were taxed incorrectly. In this case, the BC resident was charged 13% HST. They should have been charged 5%, and if the Ontario-based company was registered for BC sales tax, then they should have also been charged the BC sales tax of 7%. In that case, if I were receiving that invoice, I would call or contact the supplier. I would point out their error. I would ask them to tax me properly, and as a minimum, I would ask them to charge me no more than 5%, and then self-assess for the British Columbia sales tax. Because I'll tell you, even if you paid that invoice in full and you're in British Columbia, the BC auditors I have dealt with in the past, and they are they're very thorough. They would not let that one pass. They would charge you the 7% and would leave you to your own devices to try and get back the 8% from your supplier. So I just point that out. That's an actual example of invoices that we've seen here. Okay, the bulk of today is going to be spent on place of supply for services. This is the area that, from the NSF invoices that I've seen, this is the area of challenge. The CRA defines two main services. There are more, but there are two main ones that I wanted to sort of discuss. There's plain old services, nothing more, and then there's personal services. They define personal services as a service that is all or substantially all performed in the presence of the individual to whom it is rendered. When you go through all of the narrative and you try and understand what that means, again, I find it's best to give an example, and that would be a massage or a haircut. It's difficult to perform either one of those not in the presence of the individual to whom it's rendered. So that's the definition of a personal service. And generally, and there's always exceptions, generally speaking, for this audience and for our business, if you like, such services will be taxed in the province where they take place. And so Dave, in preparation for this, had pointed out that perhaps massage therapy at an event outside of one's home province would be a good example. And if that is the case, then you would be charged HST or GST, PST, you would be charged tax in the province where you receive that massage, and that would be correct. You may not be able to claim it all back, but that is the correct taxation, and so that's an important distinction. That said, I just sense that the personal service tax is fairly straightforward. It's not something that I feel we're going to see an awful lot of. If that's misguided, I'm happy to talk about it some more or a later time. But today I really want to focus in on the area of just plain services. So Dave, if we can go to the next slide, I'll start that. Okay, these are the three place of supply service rules for determining, the place of supply rules for determining for services. So the first one, I'm just going to go through them and then we'll go through them in some detail. The first one is whereby a supplier obtains an address in Canada for its for the recipient of its goods or services. The other one, next one would be where they do not obtain an address. And finally, there's this obscurely worded same highest tax rate rule, which we will sort of glance over at the end because it's not really relevant. Next slide, Dave. Okay, this is the ruling, or this is the wording for the address in Canada obtained. And essentially, what it means, what it boils down to, is that if a supplier has an address for its customer, that generally it will charge tax based on that address. And so just to separate this from the TPP or the hard goods, this is for services. And so the point of delivery does not exist here. Nobody is signing a purelator slip for the services that this supplier is conducting. In fact, you may not even know where the services are being referred to or where they are being applied. But if the supplier has one address, that's where they should be. Again, I say should be. That's where they should be charging tax as of. And so there are some provisions for if there's more than one address. Again, I don't think that's relevant to the group, and so I'm not going to get into that today. But that's essentially the rule there. So now I really think that this is the area where we're going to spend some time, because this is the one area that I have noticed a lot of errors happening. We're going to go through some of the CRA examples, and we're going to go through some of the actual examples as I have seen them here. So Dave, you can go to the next slide, please. I laughed when I saw this. This is from the infamous 137-page document that I've referred to a couple of times. And this is example 84, which is probably about halfway through that, that document. I laugh because this is as close to reality as I have seen here. This is something that has happened on numerous occasions with the NSF invoices, and that is where, funnily enough, Quebec design companies, web design companies, are working for NSFs in Ontario. In that case, what's not, and I've seen a mixture of it being taxed properly and not, and that's why it's in here in some detail today. So the Quebec-based company supplies web design services. It could be marketing marketing advice. It could be any number of service-related billings to a company in Ontario. The service is performed entirely in Quebec. The only business address of the recipient obtained by the supplier in the ordinary course of business is its business in Ontario. So what that means is the Quebec company only has one address for its customer, and that is in Ontario. In that case, the Quebec company, or since I'll just read from the example, since the only business address of the recipient in Canada that the supplier obtains is in Ontario, the supply of the service is made in Ontario and subject to HST at the rate of 13%. So, in summary, when there's a service and there's only one address and the supplier has that address, they're going to tax you in the province of that address, and that's how it's supposed to happen. However, as we'll see later, it's not always the way that it works. Dave? Okay, so here's an example, not exactly the same as the slide we just saw, but this is an example where a BC supplier of services to an Ontario-based NSF invoiced GST only. So from the previous slide, we know that this company, this supplier, has its customer's address in Ontario, and given the rule that we just went through, they should be taxing them 13% HST as the customer is based in Ontario. So again, to talk options here, the options are to contact the supplier and ask them to re-invoice you correctly. And again, to reiterate, because we know that if you're registered for GST, you're registered for HST, we can actually ask them to do that. We know that they have the authority from the government to do it. Whether they have the systems, again, we don't really know. And the other thing we can do is simply to self-assess. So we would pay the supplier what they invoiced us, and then assess on that invoice an additional 8% HST as if they had invoiced us correctly, and we would remit to the government the 18% that we're not allowed to claim as an ITC. Okay, Dave? Another example. So this one is a Quebec. So this is the same as the one that we went through 2 pages ago from the CRA document, and this is one that caused me to smile, because it has happened on numerous occasions, and that's where the Quebec supplier has services provided to an Ontario-based NSF. And again, as we saw in the last example and the CRA example, because they have the mailing address of their customer in Ontario, and that's the only address that they have, they should be charging Ontario HST. In this case, they charged 5% GST, and they also charged the 9.975% QST. And that's a problem, because in Ontario you're not going to be claiming that back. And so in this case, I wouldn't pay this invoice. First of all, before paying it, I would contact the supplier and I would ask them to correct it. And if need be, there are some links in the document that you can send to your suppliers if they need some education themselves on, their responsibilities. But in this case, they have a responsibility and a duty to collect HST, and there are specific rules within the Revenue Quebec documentation and laws to allow for that. And so that's all in this document, and you'll be able to send that to them. So this would be, from my knowledge and from what I've seen, this is the number one case where I'm concerned that the NSFs may be overpaying for tax, and that, to be clear, is where Quebec-based companies are providing web services, and it just happens to be, from what I've seen, Quebec-based web service companies that are providing services to Ontario-based NSFs and charging incorrectly. Okay, Dave, thank you. Now, to give you some hope, I threw this one in. This is one where it's done properly. This was a Quebec-based service company which had serviced an Ontario-based NSF and had properly charged HST. So it can be done. It does happen. It's not that people are not capable of doing it. They are capable of doing it. It's just a matter of whether they know the rules, and that's part of the takeaway from today is you will know the rules and you will be able to instruct your suppliers to tax you properly, as done in this example here. Okay, Dave? Okay, to help you, this is an excerpt from Revenue Quebec. There's a link there, and it does clearly state that there's a responsibility to collect, and then it says the harmonized sales tax replaces the QST and the GST in certain provinces. And this is what I would send to my supplier if they were in any way resistant to taxing me properly. This is the clip that I would send them, and I would ask them to go and do the research and to invoice me correctly. Dave? Okay, and this is just because of the significance of it, I just repeated this slide. This is going back to that first, the introductory slide to this section. So just to reiterate that when the service is provided to a company and the supplier has one address for that customer, that the address of the customer is where they should be taxing them. Dave, next slide. Okay, how does that impact you? This is the same slide that we showed earlier, and this is the same numbers, everything the same. And on the left here, you'll see, or the first slide here, you will see the calculation if the Quebec-based company in this case, and I'm not picking on Quebec, I'm just using it because it works best for this examples and because I've seen it quite often. Your expense in this case would be $1,039.40. If we go to the next slide, you'll see what happens in the case of a Quebec-based the company charging GST and QST. Not claiming back the QST, that entire $99.75 becomes an expense. And so not only are you charged more overall, you're also able to reclaim less, and so your expense goes up almost, I think it's $85 and change, or 8.2%. And if you have a large project, which oftentimes web design contracts can be quite significant, if you have a large project and you're eating an extra 8% along that project, you could be out some serious cash. And so that's, again, from what I've seen, the number one issue that I've seen in the invoices. And so I just want to really emphasize that and to draw your attention to, if you recognize that as being something that you have incurred, then I would encourage you to take some action on it. Okay. No address obtained in Canada. So there's really only one. I mean, there's several cases where this might happen, but today, in today's environment, the main situation where this is going to happen is where you have something that's conducted, business that's conducted entirely through email. And if we go to the next slide, we'll see how that happens. So this is an online service provider located in Ontario, specializing in document editing, and for our case, probably the most relevant for translation services. And so this is, again, I feel like a real-life example where, you know, we could potentially, you know, be charged incorrectly. So in this case, a client in Saskatchewan sends its documents by email to the service provider, who returns the edited documents again through email. The services are performed by employees of the service from its business address in Ontario. The service provider does not obtain the address of its clients, and that's an important point to to dwell on for a second. Because it doesn't know where you are, it can't possibly charge you your local tax. It has no hope of doing so. And so in that case, what the government has come up with, it said, is that then the supply would be deemed to have taken place in the home province of the supplier, in that case, Ontario. So this one, again, just to reiterate, is an online service provider located in Ontario, servicing a client in Saskatchewan, but charging that client in Saskatchewan Ontario tax because it doesn't have the client's address. Okay? And then the same highest tax rate, Dave, if you go to the next slide, I will touch on this very, very briefly. And I think you'll see why. It really boils down to, if you can't determine how to tax somebody on the previous two rules, then you charge them the highest possible tax rate that you can find from any of the provinces that are touched within it. I'm not going to say more than that. I don't think that this rule will ever apply, or I just can't see it ever applying to any of the NSFs or even to the COC, and so I really don't want to dwell on it. It's there really only for completeness of the document today. Dave, can we go over? Okay, so I put this in as well because two reasons. One, I think it's relevant and is potentially going to be something that you would come across, and two, really to emphasize caution. You know, one thing that I've learned from GST and HST, you can call the CRA, you may even call the CRA and ask them something and get an answer. I can tell you that it may not be the correct answer, that you know, sometimes you have to push them, and knowing something about what you're talking about really helps, because they're human too, and they're looking up documents and keywords and searches, and there are many, many twists and turns within the GST and HST legislation. That said, I don't think that our business is going to be one where, again, there's no rolling railway stock, as Dave alluded to earlier, so I don't think it's something that we need to be really concerned with. But this part I want to highlight, A, because, again, we might come across it, and B, because you're probably sitting thinking, if I've given you proper examples and I've spoken to them well enough, you probably have a good idea by now as to how services and how tangible personal property should be taxed. And here's the curveball. And so if it's services performed on tangible personal property, there's different rules. And so I've put in a couple of examples just to highlight, if Dave would go to the next screen, really just to highlight the nuances and to give you a feel for where that might happen. And the second one is something that I think might actually happen to some of us. This one, a law firm in Quebec is hired by a company in Nova Scotia to supply legal services that consist of drafting an agreement for the sale of industrial equipment that is owned by a Nova Scotia company. The equipment is situated in Nova Scotia while the service is provided or performed. So the rule is that the tax rate to be applied is, even though it's a service, it's going to be wherever the tangible personal property resides during the performance of the service. And so it says at the bottom, the equipment is situated in Nova Scotia when the service begins to be performed and remains situated in that province while the service is performed. Therefore, the supply of the service is made in Nova Scotia and subject to HST at the rate of 15%. If I think a better example might be if the law firm is hired by a company in Ontario for legal services of goods in Nova Scotia, then how would that play out? And it plays out exactly the same. Because the tangible personal property is in Nova Scotia, that's where the services are deemed to have occurred. And again, you'll see that there's a very distinct difference between the tangible personal property rules and the rules that apply to the services that we just covered. And Dave, if we go to the final slide for today.
Martin, before we move on, we have a question.
Yeah.
Roanna is in sales tax-free Alberta and wanted to know if they were in Alberta buying goods from BC and consume them in Alberta, would they claim back the 82% of the PST, or should they have the vendor charge the invoice only GST?
They should have the supplier charge only GST.
Okay, thank you. That was a quick one.
Yeah, I mean, I'm happy to expand on it. I don't want to be quick with that remark and not further explain it. So again, just to go back to the delivery of the goods. So if the supplier is delivering the goods to Alberta, which is my understanding, then and the NSF is consuming them in Alberta, which is the secondary part. But regardless of where the NSF consumes them, because the supplier doesn't know that, the supplier is to charge tax based on the point of delivery. And so the supplier in that case would know where it's delivering them to Alberta, and it's going to charge 5%. If, and I'll add a twist, if the NSF was then to take those goods to Ontario and consume them there at an event, then the rules would change. The supplier wouldn't change, but the NSF would be expected to charge or to self-assess 8% because it consumes the goods in Ontario.
So
I hope that helps.
I'm going to ask one more question that follows up on this. When you talk about you receive something in Alberta, you then consume it in Ontario. I think for a lot of us in sport, we often buy things and then consume them repeatedly in several provinces. So say we buy some signage and then we use them over and over again at events.
Right.
Is there advice on those types of items?
Yeah, I would say that there has to be a common sense approach to it as well. If it's something that you're taking to an event and bringing back to province, then it's not consumed. If you're taking it to an event and you're leaving it there or you're destroying it there or it's of no use afterwards, then by the letter of the law you would tax it in the province where it is consumed. There has to be, however, an administrative component to that. If it's a $20 sign and you're talking about $1 worth of tax and it's going to cost your accounting team $20 to track and to administer it, I don't want to say not to do it, but I would think twice before doing it. There is materiality that even the CRA would look at and say that we don't really expect that. On the other hand, if it's $20,000 worth of medals for a championship and you're taking those from Alberta to Nova Scotia and there's a 10% spread and you're leaving them there, then I think the CRA would look at that one, and I think you ought to too.
Okay, great. Thank you.
You're welcome. Okay, so this one I think is something that the NSFs may run into in some way, shape, or form. I thought, like, engraving or finishing of some kind, this could be something that applies. A manufacturer in tax-free Alberta, or almost, sends parts to a company in Ontario to anodize the parts. The manufacturer ships the parts to the company in Ontario. The company in Ontario later ships the anodized parts back to the manufacturer in Alberta. So, in summary, somebody from Alberta sends parts to a company in Ontario where work is done on them and they're shipped back to Alberta. Again, going back to the previous example, and you probably have a good feel for it by now, the parts are situated in Ontario when the service is performed, and they remain there for the whole time that the service is performed, and therefore the supply of the service, the anodizing service, is deemed to be taking place in Ontario and subject to HST of 13%. The whole wording around the parts being there when it starts and during the whole process is really just to cover off the fact that if a part of the service is conducted in Ontario and then a part of it is in another province, then different rules apply. Again, we could probably spend the better part of a week if we wanted to go through all of the details of the GST legislation. I just don't think it's relevant for the group. If I've missed the mark on that, I would be happy to hear feedback on the areas that people think we have missed, and if possible, maybe we can schedule another call at some other point. But that concludes the webinar for today. Thank you all for your time, and I'll take any questions.
So, for everybody, we'd be happy to hear from you with some questions. I know we gave you an awful lot to digest here today, and as Martin said, he summarized 137 pages plus years and years of precedents in the last 54 minutes. So we'll give you a couple of seconds to come up with any questions. And not hearing any right now. I think there's, again, a little bit of digestion going on. Again, the handouts are available to you on the right-hand side of your screen. You can download them now. We will also email those out to you in a couple of days, as well as a link to the full YouTube of the video of the presentation today. So with that, Martin, I wanted to say thank you very much on behalf of COC and on behalf of the NSF community for your help today. This is obviously an issue that is can be sticky and a bit difficult to deal with, and given sometimes the repercussions with CRA, a little bit intimidating. So I think the chance to soften the edges on that a bit, get a little bit better sense of some rules of thumb to help people move on from this, I think is a great service. So thank you so much, Martin. We really appreciate it.
You're welcome. Thanks for the invite.
And for everybody, thank you for joining us today. Keep an eye out. We will be sending out some information about some future webinars to come through our revenue generation and marketing series, both before and after the holiday break in December. So with that, thank you very much for your time, everybody. Really appreciated you joining us. And just like that, there's a question. Karen Wan wanted to say thank you. That was informative and useful, so thank you, Martin. And with that high note, thank you, Karen. That's a great way to finish it off. Thanks, everybody. Have a great day, and thank you for joining us.
Yeah, thanks again.